Hey, it's Wall Street Beats Roundtable. Jeff Mackey sitting in. Got Robert Marson, Bob Morris, Kevin Bakes Baker on the bass drum. We'll start with Bakes just because we're not sure how long we're going to have him here. First of all, how you feeling there, Slim? And then what are the charts telling us going on? The crazy action going on this week.
Pardon me?
We had some crazy action going on this week. What are the charts telling you?
It's a bull market. It's a bull market. And we'll talk about some of my bull market stocks. But now, as a shameless plug to Wall Street Beats, we've got people like Ben Bryce shorting stocks very effectively. Kinder Carey talked about. We've got Russell Young talking about Enphase. So We're making money on both sides of the ledger in a market that wants to go north. I'm personally pumped up.
Yeah, things are looking good, and it's a trader's market. So we've seen action on both sides of the fence this week. Hey, Morris, what are you seeing? Baby. Now that's suddenly ripping, right? We got just an unbelievable amount of momentum, and it's getting cold. Things are looking good.
Yeah, natural gas prices have ripped here in just the past week, and the gas-focused names have moved here, which was one of my worries that, as soon as it turned cold, they start to move, and we'd be chasing them a little bit here, which is what I'm reluctantly doing here today. But you've seen natural gas just break out to the upside here. Monday, it was $2.84. Yesterday, almost $3.50. And that's just purely momentum and technicals on the fact that it's getting cold across much of the country. You're seeing snow watching football. You're seeing snow. My dad in Colorado, it's cold here. That first wave of cold winter temperatures has put a spark under natural gas prices. And we've always noted that EQT is our favorite natural gas-focused E&P name. And I've been waiting for an opportunity to buy it. Yes, it did reach a 6-month high last week, but earlier this week I started or initiated a position there because I haven't owned it to date. I've been wanting to buy it, so I bought 20% of a position. We'll watch it here. If it goes up, I'll buy more. If it goes down, I'll buy more. But am I chasing a little bit here? Maybe. We'll see. I just don't want to be caught out of the name if this winter weather continues to be very cold here and that continues to lift natural gas prices. We've always noted that the long-term fundamentals for natural gas are very strong, particularly starting in the second half of next year with then the strong uptick in AI data center power demand and some of these LNG projects, newer ones starting to come online. So that's all positive from a longer-term perspective, and one of the reasons people will want to own these names as they look out further. What's interesting here, too, is with this pop in natural gas prices, all this shut-in production or these drilled but uncompleted wells are beginning to come back online. And Williams, we noted 2 weeks ago, said that they estimated then there was about 4 BCF per day of natural gas production in the U.S. still shut in or waiting to come online for better prices. That's about 4% of the total U.S. natural dry gas production. And we've always said that, look, between 3 and 350, that's going to come online. They're going to start completing these drilled but uncompleted wells. So that's happening now. And that's a little bit of a headwind for natural gas prices. We'll see how that plays out. We put out a note on EQT when they reported a few weeks ago and said that they'd already brought all their shut-in production back online. So at that time, they bumped up their guidance just for the fact that they weren't modeling production being shut in the fourth quarter because it had come back online. It's going to stay online with these gas prices up here at these levels. So you'll see over the next several weeks or month, you'll see U.S. natural gas production tick up here as this shut-in production comes back online. But again, we're watching the weather. Weather's going to be the biggest factor near term on what natural gas prices do. But again, I want to get a toehold on some of these gas-focused names. So like I said, I bought a 20% of a full position in EQT this week and continuing to watch it. I'm looking to add to it on any move up or move down in the stock.
Now, how priced in is a Thanksgiving stock in? Like you said, last night, Thursday Night Football is practically an ad for cold weather last night. We're going to have Thanksgiving snowed in by some account. Is that priced in right here? What are we looking at in terms of the swing factor that the storm's coming in for the next week?
Gas at $3.50, I think it's basically priced in at this point because you're just starting winter. You have to have some really severe cold weather to see that spot price spike. And you always get those temporary spikes up and then come back down when the system is overly stressed. I don't think we're going to overly stress the system. We've still got a storage overhang. We've still got more natural gas in storage versus a year ago. From a fundamental perspective, with gas production coming on, with the storage overhang, those are a little bit of headwinds for the gas price. So everybody's looking at the weather right now. And is it priced in at $3.50? Yeah, I think for the most part it is. But if it gets extremely stressed, it could go between 350 and 4, but I think it's priced in at 350.
Can I ask you an impossible question? So let's talk about no one can answer this question, but I want your opinion anyway. Where do you think natural gas is for 2025 and 2026? I think the strip is in the mid threes still, but with all the new demand coming on, yet there being an infinite supply at the right price, which today seems to be 350 because it doesn't ever seem to want to hold above that. Do you think that if you were modeling out a royalty business deal and the realized price was a key, what would you put in your model for natural gas in 25 and 26 with all the new demand coming online?
I'd be at 350 to 4, probably closer to 350 as a full year average.
Full year average.
The reason being is, although all these companies are saying, oh, we're going to keep production flat, look, EQT said that their guidance, regardless for 2025, is flat production. And so you're going to get all this uptick in the shut-in production come online at 350 to 4. And some of these companies may squeeze in a little bit more production. You're going to continue to see these efficiency gains. And maybe they'll let production creep up a little bit here. In keeping production flat next year, EQT said they're going to drop 2 rigs and 1 completion crew. Maybe they hang on to some of those and let production creep up a little bit. The other side of the coin is that there's a lot of this associated gas production with the oil that's produced. So as long as oil prices hold up, that's going to help the natural gas production too. But you get up to $4, and then there are going to be companies out there itching to step up activity and put more gas in the market and see what they can do here. But I think 350 is a good base case for 2025 as a full year average. You're going to get the cycles through the seasons, but I think as a full year average with a normal winter, again, a normal winter, I think that's a good base price.
Well, 10 years ago, I did a mineral rights deal. And sorry, go ahead.
Oh, go ahead, Marcy. Yeah, that's a better question, man.
10 years ago, I did a mineral rights deal. We used $4 as a price level through the life of the contract, and I think we've averaged 250. So natural gas has been the cheapest asset in the world, U.S. on paper, forever, and yet it can't stay above $3 on a regular basis, except when we had the one spike because of the Russian gas got turned off a couple of years ago. So you're wrong when your price realization, it can be early for a few years, but after 10 years, you're wrong. So I stopped trying to stop rooting for $4 gas because I haven't ever seen it sustainable.
So Morris, which does raise the question, what's your price point on this? We got 30% move on EQT over the last month. It's how far has that got to go back for you to start building that position beyond just a 20% toe dipper? Yeah,
I was looking at the technicals. I think, and Bakes may be able to jump in on this too. It looks like 44 is a resistance level, and then 40. If it dips back below 40, I'm going to be a lot more aggressive in adding to the name here.
Cool. All right, Marson, what are you looking at besides looks like the ocean from here, or maybe the Gulf?
I'm in lovely Fort Lauderdale, and I woke up put a sweatshirt on when I walked for coffee. It was 40-something degrees this morning in Fort Lauderdale, so they think it's the Arctic here in Florida when I walked out because it was 47 degrees this morning. Anyway,
we're all hurting, man. We're all hurting.
I'm on vacation getting some sun, but I don't want to jip our subscribers, so I'm working. I got a couple of ideas. There are reports on stocks I've mentioned, and I'm long. And one is a semiconductor IP company, and that's a unique little company. It's about a $350 million market cap called Arteris. AIP is the ticker. And I pitched this at some point in the spring at 8 and change, and today it's 8 and change, which kind of sucks. Honestly, it's been a shitty stock, and it's been a shitty stock for 3 years. And I beat the hell out of the CEO, but that doesn't make him any smarter or any more worried about the income statement than anybody. But so they make IP software and actually hardware that goes into system on chips, big chips that have multiple blocks. They have a block of memory, a block of video, a block of processing, a block of this, and they license all these component blocks from other semiconductor companies, and they build a big chip that is like a computer on a chip. And they are the only viable leading independent manufacturer and designer of these services and hardware components. So that's pretty cool. They have a big moat. It's about a $1.3 billion TAM. This is a small company. It's doing about a $60 million revenue run rate. And when they came public, they promised 25 to 30% sales growth, of which they've delivered 5%. So they pooped the bed on their forecast. Okay. So why would I stick with a loser? Because I actually have a $5 and change cost basis. I'm making money, but I'm waiting for the aha quarter where they post some real strong growth because they have 90% gross margins. They have a monopoly the only companies they compete with are the companies that make design the SoCs themselves. So NVIDIA could do this internally, Qualcomm could do this internally, or they could hire these guys to do it. As the SoCs get more and more complicated, though, they become a more viable supplier to even in-house design teams for the biggest semiconductor companies in the world. So if they start growing 20 to 25%, which is what my target is for next year, their remaining performance obligation, which in software is the term for backlog. And it's like the business has been ordered, paid for, and they have to prorate the revenue over 9, 10 quarters, 2 to 3 years. So they can't recognize it all up front. But their RPO is soaring. If you go on the website and you look at deal announcements, it used to be one every 1 or 2 months. Now it's 2 a month, and they're just starting to kill it. It hasn't shown up in the numbers yet because the proration factor here. But with ARM, they have a joint venture with ARM, and ARM's a competitor and a frenemy, I guess you call that in technology. And ARM trades for 20 or 30 times sales, something crazy like that. These guys trade our forecast is for 70 to 75 million in sales next year and a $300 million enterprise value. It's only 4 times EV to sales, which is very cheap. Now, they lose a shit ton of money.
It shouldn't be cheap, though. Isn't this a great time of the world?
It should not be cheap. No, when you miss,
it should be.
When you go public and you're 8 for 9, the first quarter they made their numbers, right? Second quarter they missed. They haven't not missed since. Okay. So when you do that, you earn yourself in a doghouse with investors, and they're in an investor's doghouse until they have a quarter that people say, wow, this is fun. They're finally delivering. But if and when they deliver, they need to deliver because they spend 80% of revenue on R&D, and they are not cash flow positive. They lose money. I joke with the guy. They deliver they just heard Silicon Valley's rule of 40. They're delivering rule of minus 40. And that's not good for a company, if you know what I just said. Okay? So
all right, we'll get back to kicking his ass. I want to hear what Bakes has to say on this. Bakes, it's another word. Doghouse is range-bound hell.
And this is the Robert Marson chart over here, okay, $5 or so, and dog-earing and highlighting the 10K. And then here's Dumb Bakes coming in with his chart book and saying, okay, this looks like a pennant to me. The volume is picking up here. This 50-day crossing above a rising 200-day is bullish. And if you see 931, I think, Robert, you want to get full. And at 954, you really want to get full. Now, I know you won't do it because that's a medic to you, but this to me is more bullish than that fundamental picture you just laid out. Oh, and by the way, again, you're a momentum investor. William O'Neill, may he rest in peace, 12, 19. That's the kind of stuff.
Bakes has got a hitch in his giddy up there. Marson, so when you're whipping this CEO's ass, I like it when the technicals and the fundamentals line up. What's going to break us out of that channel in a good way? I wouldn't mind chasing this thing a little bit. It sounds like they got a lot of upside, but what do they got to do?
They'll deliver that first 20 to 25% revenue growth quarter, and people say, aha, now it's a growth stock. It's a growth company. And that's what they got to do. They just got to put the numbers up. They'll get paid. And a lot of my stocks take a year because I buy the low end of the range, and it's got a lot of resistance to chew through. But when they go, you can see in some of the stocks, they go, and I'm not doing the momos that are already going. We got to wait for my companies to turn the business fundamentally and show the growth numbers, because I'm always buying growth disappointments. You don't go from growth disappointment to big beat and raise in a quarter. It never happens. It takes 2, 3, 4 quarters. So if these guys deliver, the stock could double or triple when they have that aha quarter. That's what I'm saying.
And do you see any signs that they got it lined up? Because it should be right pickings for them right now.
Yeah, I think they're teed up to the next quarter or two. The next quarter or two should be the 20% grower, and that's when they'll get paid. But going to 10 times going to 10 times sales for this kind of stock is nothing because the peers are double and triple that. And, as I said, it's 3.5 times sales now. So if it goes to 9 times sales, you're going to nearly double to triple your money if and when they deliver.
All right.
And the second name
Bakes
is
unglitched on us, and he's got a glitch on us. So let's get to Bakes. You got any other thoughts on what we're talking about here? AP?
AIP, yeah.
AIP, Bakes?
Pardon me?
AIP.
Oh, you unglitched on us. Were you done with AIP?
Yeah, he unglitched.
I mean, my succinct 60-second synopsis of how to read a chart, and now you want more. I'm giving you a banquet. They bring out the prime rib, and you're picking through cauliflower. That's like Marston's investing style. Let's go.
We do it for the subs, baby. All right, Marston, give us number 2. What else you got?
TAT. It's an aerospace company. They make parts. And they actually service and do MRO, maintenance, repair, and overhaul on all these aircraft components that chew on the heat exchangers and landing gears and auxiliary power units. So the company it's a small company, 75. It's actually headquartered in Israel, but it's headquartered in Charlotte, but it's domiciled in Israel, and they're trying to re-domicile in the U.S. in my opinion. And they bought some businesses 2 to 3 years ago that increased their TAM a tremendous amount, and they're growing about 30% a year, quarter in and quarter out now for about 2 years. So that's very strong. The company signed an order to be the only U.S. servicer of auxiliary power units, which is a jet engine that makes the power on the plane for all the Boeing and Airbus planes flying around in the world. And that's a pretty lucrative deal. So they're growing 30% without their biggest growth engine at all being in the mix. And when they start servicing the APU units for Boeing and Airbus, their TAM is going to go up 5 times. So that's a pretty big deal. So these guys,
how exposed are they to Boeing's clusterfuck going on up there?
They have OEM business and it's suffered, and they have MRO business that just depends upon the hours flown by the airlines, and that's booming. So the service business is booming. Now, they've said that Boeing has screwed up its supply chain so badly that getting landing gear parts is a problem. When you fly, you don't want to ask what the model of the aircraft is. You want to ask if they've got new landing gear parts done recently.
Yeah, keep it simple. You got wheels on this thing?
You got a 2-year delay to get landing gear parts, they said. These guys think they could grow revenue 25 to 30% a year as far as the eye could see, for which is, say, 5 years in our business, 3 to 5 years, right? And they could take their gross margins and EBITDA margins up 25% from where they are now. So I get $2 in earnings in 2 years, and the stock is 21 today. So that's crazy cheap for a 25 to 30% growth. It's 2 years from now, 8 quarters. They're doing 25, 26 cents a quarter. They'll be doing 50 cents a quarter in 7 or 8 quarters. So I think that's a 20 PE stock, right? 20% growth. That's a PE growth rate of 1. Most companies trade at 2 or 3 PE to growth rate. So
sure.
1 times growth rate, redomiciled in the U.S., 75% of their business in North America. So it's an American company, really, by location and revenue. So it's a $40 stock in 6 quarters, discounting the 8th quarter, in my opinion. Bakesy, what's that chart?
Yeah, and we talked about this in our Stock Kings for subscribers, but 2 points come out to me. Number one, I could have sworn I sat here a month ago and we were lamenting, volume was 15,000 shares. Here it is at 22. Number two, there's virtually no resistance. Robert Marston puts on his momentum cape, and I just get teary-eyed when that happens. Here's 28.49, the all-time high. So watch what happens when you have a close above 28.49. It's going to light up like a Christmas tree. This is absolutely beautiful, and this is small cap investing 101. I'm not blowing too much smoke because we disagree a lot on air and off. But you take out 28.49 and it's giddy up.
What's the time frame on that chart there?
This is the monthly. So that's a great point. This is 2007. So you can make the case this is a Louise Yamada, Kim Kardashian base. And that's not her term. That's J.P. Peretz. But the bigger
Louise
the base,
Yamada, and we'll get back to that. We'll stick a pin in Louise Yamada and
her lawyers online too. But the bigger the base, the higher in space. So you've got 17 years of pent up buying. If you ever get his $2 number, they're going to slap a 20 on that with no problem.
Yeah. I love the all-time breakout high. That looks beautiful. Jump ball for you guys. You guys doing any Christmas shopping yet? What are you buying? What are you shopping? Where are you going?
I don't shop till Christmas Eve. I'm a guy.
It's funny.
I'm a man's man. I shop Christmas Eve.
Our wives watch this show, Mackie. Come on. Help the cause.
I asked my wife yesterday why UPS and FedEx comes by our house 3 times a day.
It's because they're delivering Gap product. I tell you what, I don't know if you guys saw that quarter yesterday, but Gap came up big. They bookended the dog shit Target that quarter that we had on Tuesday. Gap came out. They were better than expected. Santa Claus is inching his way in. The consumer stocks have actually been screaming a little bit. It's been a nice little rally below space there, below the headlines and the Bitcoin stuff. It looks pretty good. Bake says you don't sell these 52-week highs. And
Robert, what's going on with Ceragon? Robert, what's going on with Ceragon? CRNT hitting new highs today.
Right there.
Well, they had a good quarter. They had 18% growth, and people are bitching about the telecom equipment business being so bad. Now, 10% was organic, and 8% was purchased. But
that's a monkey.
It's a cheap dude. I have them making 50 cents in 26 and trading it 15 times because it's Israeli stock. So that's $7.50. That's my target.
Yeah, you're going to get there, in my opinion. This is gorgeous,
gentlemen. I've been doing this for years. I've never bought a hardware stock at half of sales with 40% gross margins that didn't double. Doubling is the worst case scenario I expect out of this. My cost basis is $275.
Love it.
Wow.
Hey Jeff, on the retail side, you see here locally in this shopping strip center they have here, they opened a Bloomingdale's last weekend. I've never seen a traffic jam like it was. They had police directing traffic away from the parking lot because it was full. This is a huge parking lot.
Normally, you need the cops to get people into a Bloomberg. That's incredible. Bloomingdale's, the old division of Macy's. That's amazing. They put a new one in.
Yeah, they put a brand new one. It was mobbed. And I've never seen that parking lot full. It was so full. People, my wife had to park 2 blocks away, and police were directing traffic away. It was insane.
God, that's just old school. I used to go Christmas shopping with my old man, and we'd go to a Target, and if the cops weren't out front, he would honestly be disappointed. He would go in and yell at the store managers that they didn't have cops directing traffic for the parking lot, just because he liked a little chaos. That is a good sign. That's actually healthy.
Yeah.
All right, Marson, what else are you looking at? What else? Just pick a topic, any topic. What are you guys looking at that other folks wouldn't be seeing right now?
I'm seeing a very good action in cheap stocks that have catch upside, especially if there's a short interest. That seems to be the thing that is driving. And there's a lot of short interest in some of the power plays, the electricity plays, the chart industries, the PAL industries. Chart industries has gone up a ton, but there's 20% of the float is short, and that's contributing to the performance. Bloom Energy had a lot of short interest, made a big announcement, right? So you look at these things, Applied Optics, which our colleague caught at $10 and is now 30. If you can find a stock you like, it's going to beat and raise or have good news, and it's got 20% short interest, buy the hell out of it, because if that good news, it's not going to go up 50%, it's going to go up 200% on that announcement. That's what's
I tell you what, that's been glorious. You get a little bit of a beat. That's been a story with Peloton too. They got about 1/5 of it short, and it's not going out of business. So if it's not going out of business, that was pretty much your short bet. They've got their cash flows extended out 3 years, which they're going to be around. Man, how much you paying to borrow that money? This is a stock that still has a little space to run. We were on it about a month and a half or a few months ago, actually, and we've gotten almost double since then.
If you're broken growth and you resume growth, not just survive, they're paying for that growth way up front, really fast, really hard. And the shorts are being squeezed out of it at the same time. So the longs are piling in, the shorts are getting squeezed. If you're short, it's a shit show.
Which is beautiful. And if you're long, man, it's Christmas every day. Peloton
Every day.
drifts up every single day.
You wake up at 7 o'clock and you check the pre-market because you know it's going to be green.
Yeah, exactly. All right, you guys. Hey, Merry Christmas for this and more. Check out wallstreetbeats.com.
Hey,
we got
what am I? Chopped liver?
Oh, Biggs, hell, man, you told me before that you're too tired. You tapped out. You're in there. Come on in there, fella.
Wow. That saddens me.
I'm not trying to slay you. Come on, Burl Ives. Bring us some heat. Give us some picks.
I'm going out to my recording session with the Kelsey brothers singing Silver and Gold. Anyway, rock and roll hoochie coo. This is Range Nuclear Renaissance, NUKZ. And I wrote down in my notes here, FERC schmirk. Everybody was concerned, oh no, the FERC is not going to let Amazon use Susquehanna. I got to tell you, this trend is so big, it doesn't matter. This is a new high yesterday, which I love. I'm up 29% in 2 months. I talked about it here when I first bought it. So I think subscribers ought to, if you're making 29% in 2 months, then go someplace else. But we're pretty good at this here. The volume is picking up. The number one name is Cameco, which is the number one uranium miner. And what strikes me about this is hitting a new high with uranium spot at 79.30, not doing a hell of a lot. So if uranium does what I think it does and resumes its mega trend north and takes out that 106 high, then you go to 130, which is the 07 pre-Fukushima high. And these mining stocks, just the bottom line explodes. Every PM worth of salt yells at their analysts. They call for their natural resource analysts. Oh, wait a minute, they don't have one. And they have to get in uranium in a big way. So stay tuned here to Wall Street Beats, because I'm already digging through my prior uranium ideas. I've been on this trend for 4 or 5 years now. And so it's not new to me. Uranium is a huge opportunity, as is nuclear. But stay tuned for uranium ideas, and we'll make some money. Next, and I know I'm going to have eyes glazed over here, because when I talk about my sell discipline, this is Microsoft, all right? Flat out sell Microsoft, MSFT. And I know even my esteemed colleagues who play pinochle with Frederick Hayek on the weekend, I didn't go through the 10K and dog ear and highlight this. I did study virtually every stock that rolls over and what they look like. And this is what they look like. They take out the 200-day moving average on a closing basis at 395 some odd. Then at the beginning of the month, I'm going to ballpark this, the 50-day comes down through the 200 and you sell a second, third. And you don't call an analyst, you don't call a broker, you don't call your priest, you sell the stock. The 200-day turned down yesterday. That's why I'm being so vociferous about this. All right. This stock
nothing good happens under the 200-day.
No, this is even worse. This is the 200-day turning down. Okay, it just happened. So you have the close, the 50-day through the 200, and the 200-day turns down. And I know that you guys and our subscribers are not going to pay attention to me for the second or third time that I say this is the sell discipline. You will about the 30th time when I say this is going to happen and the stock goes down like Cisco in 2000 and 2001. Now, I don't think that's going to happen with Microsoft. That's clickbait, and again, I admit it. But Microsoft is going down. Something bad is happening here, and I made it exactly clear. I don't like Microsoft. Am I being vague? By the way...
No, you're not. You're being very specific. So you're shorting it right here. We're getting puts where it's how aggressive you want to be against them.
Yeah, shorting Microsoft is like kissing sister. How much is it going to go down? It's 7% of the S&P. You get the guys that are going to have to be there begrudgingly, so the Philadelphia pipe fitters don't yell at them. So I think go to Ben and Russell for shorts that go down a lot. And this to me is just, I'm doing this for two reasons. If you own Microsoft, you shouldn't. And number two, please stay tuned to Wall Street Beats, because we talk about selling stocks and locking in gains, which is as important as buying stocks and new ideas. That's what I'm saying. All right. Last thing. I know we're running low on time. And this goes to what we've been talking about here and also in Stock Kings for subscribers. This is ELME. All right. This used to be Washington Re, and I don't know how prescient they are. Maybe they go into, I don't know, they want to go into Florida or something, so they didn't want to have the Wash REIT name. But I bring this up because these folks own retail properties, multifamily, medical office space around DC. And I've got people pushing back left and right. Oh, Beggs, Doge isn't for real. It's the Grace Commission too. There's no way Vivek and Elon can find $2 trillion. And I would say that too, except you have stocks like this that are starting to sniff out that their tenants are going to get fired and rents are going to come down. And then I go to Ben, I call him B2, Ben Bry, and I look at his short of Booz Allen, 95% of revenues from the federal government, and SAIC, which is 80% plus from the federal government. The market is sniffing out that there's a new sheriff in town, and his name is Elon Musk. And the years of fat that have built up is going away. And it may not be $2 trillion. I don't care. And the point I'm bringing up is that the consensus thinking is that it will never happen. So the negative surprise is going to be to podcasts and pundits on the left and the right is when they say, holy cow, we're going to talk about cutting defense budgets, and we're going to ask everybody in the Pentagon to bring in their papers for resignation, or the Department of Education is now toast. Or you go to zero-based budgeting in other places, and you say, what do you do here exactly? And I know that's far-fetched, but I also know it is wildly out of consensus, except for Wall Street Beats and our subscribers. So yes, that's a shameless tout, but if we're right, I want you to come back and we'll replay these tapes and say, hey, we told you about this and you could have gotten out of the way.
Beautiful. You need some Robitussin, my man. You okay? You're done now. I don't want to cut you off.
No. I'm in a NyQuil-induced stupor. It's ugly over here in Bakerland. So I wanted to do for our subscribers and you guys. And this is a lot of fun. I like you guys a lot. And we're making money for people left and right. And I think we should have more fun.
Amen, brother. Amen. Happy holidays to the gang. Hey, you like what you're hearing? Check out Wall Street Beats, man. It's the hot thing there. Beggs tells you he'll make money. We're making people money. We're having a good time. Everybody's getting ready for the holidays. From ours to yours. Enjoy the weekend, folks. We'll see you back here on Monday.
Silver and gold.
Sing us out, man. Beautiful.